Hi, I'm Brooke Thackeray. Welcome to What's Hot and What's Not in the month of November. Today we're going to take a look at what sectors tend to perform well on a seasonal basis in the market in November and what sectors tend to not perform so well. We'll go through some of the charts and also some of the pages in my book as well. And then we'll talk a little bit about the U.S. election and what the implications could be for the market as well. So let's start by jumping in and taking a look at my Thackeray's 2024 Investor's Guide. First of all, I want to say the average November over the long term is actually quite positive, as you can see here. This is from 1950 to 2022, almost at 1.8% here. And this is the frequency of the S&P 500 in the same time period from 1950 that the S&P 500 has been positive on a daily basis, trading basis. This is actually quite strong. So November tends to be one of the better months of the year. If we take a look at the sectors of the market here, we can see here the top performing sector. This is based upon the average gain from 1990. So this is ranked according to average gain. And this column here is on the frequency of outperforming the S&P 500. The top sector tends to be the information technology sector. Now, the sector's actually stumbled a little bit with some weaker guidance from a couple of big tech heavyweights, i.e. Microsoft and Meta. But we'll take a look at that in a second. Then industrials tends to perform quite well on a frequency basis. And the industrial sector tends to be the top performing sector. Materials, so if you get the pattern here, we're looking at some of the growth sectors and cyclical sectors here. And here we are down to consumer discretionary, which has actually been performing quite well recently. When we actually come down here, we can see that it's largely the defensive sectors that tend to underperform. I do want to point out this down here. Look at the energy sector, only outperforming the S&P 500 27% of the time, which is very weak actually, but it actually beats the utility sector, which actually is at 30%. So these sectors tend to be the bottom of the barrel here. Now, the energy sector sometimes can find a bottom in late November. We'll have to see if that happens this time around. If we take a look at some of the subsectors here, the chip sector tends to perform well. That's usually in the first part of November, though. So once again, we're dealing with some of the cyclicals. Here we have the home builders close to the top of this subset list. And I'm not convinced. Yes, we are in this home builders seasonal period here, but we are starting to see some weakness in that sector. Retail actually tends to perform well. I mean, there's a lot of narrative around the retail sector not performing well, perhaps because the consumers are running out of money, but there's also some signs that they haven't quite run out of money yet and they're willing to spend money. And this sector tends to perform well in November, at least up until Black Friday. Let's go down to the bottom of the list here. Gold and silver. These aren't terribly weak performances. They tend to still be positive. In fact, all these tend to be positive here. And our performance isn't terribly weak either. So a few periods have actually brought this down a little bit. Now, in recent years, we have seen the gold sector actually find a bottom sometimes in November and December. Now, the gold's been setting an all-time high recently, and so it's been performing quite well. But we could see it actually perform quite well. So it has been positive here. It's just not. November just tends to be a strong month for the market. We'll have to see if November is actually weaker, how gold and silver perform as well. But gold and silver can find bottoms, particularly gold, in the month of November, and much more likely in the month of December as well. Here we are with information technology. You can see here that October tends to be a strong month for November for the technology sector, and then November as well. In the month of October, though, we have seen some stumbles for the technology sector. It slightly outperformed the S&P 500, but it started to stumble a little bit. But it tends to perform well. If you take a look here into into the beginning of December, and then it takes a little bit of a pause before resuming its seasonal strength as well. So the technology sector tends to perform well. If we take a look at where it is right now, in 2024 so far, we've seen the technology sector actually really just fairly flat to the market. This is relative to the S&P 500. So we've seen some ups and downs along the way here. For the market to do well, we like to see the technology sector actually leading. That's what's happened in recent years, but we're starting to see some rotation into other sectors of the market. We haven't seen the technology sector fall apart yet, relative to the S&P 500. If that does happen, that could be a very concerning sign for the market. I don't think you'd see money really flow into the other sectors of the market, and those sectors perform well, and the technology sector not perform well. But right now, that hasn't happened. We still see, on an absolute basis, we still see the technology sector on an uptrend at this point. This is Canadian banks in the top panel here, and this is Canadian banks relative to the TSX in the second panel here. Look at this strong performance in August and into the beginning of September, and then a pullback here, but still, this was quite impressive. That really was based upon the Q3 earnings from the Canadian banks, which were better than expected, and also their forecasts were actually quite good, and we saw that performance really pick up here. So Canadian banks have been performing extremely well because of their earnings, and on an absolute basis, it did very well. At the same time, the concern is at the end of November, when they start to release earnings, we may see that the sector stumble a little bit on their Q4 earnings unless they are spectacularly good. Something to watch out for, but Canadian banks still are performing quite well at this point. Here's the industrial sector. If we take a look at the monthly performance for the industrial sector, November is the best month of the year for the industrial sector. It's ranked quite high here. The median is across the bar. This shaded bar is the average, and the diamond for all these charts, by the way, is the S&P 500, unless it's noted otherwise. And it's outperformed better than zero almost 80% of the time, and outperformed the S&P 500 more than 3/4 of the time. So November tends to be the solid month for the industrial sector. If the market is doing well, look for the sector to perform quite well. Here's where we're at right now with the industrial sector. This is on an absolute basis. We did see some consolidation taking place here, really in the summer months into earlier in the autumn. And on a relative basis, it underperformed, but since July, it's actually been outperforming the S&P 500. It had a little bit of a pullback here, which could be a good setup for a month of November. And if you take a look here, we can see that it's become oversold on a full stochastic oscillator basis. It hasn't turned up yet, but overall, it's still quite favorable for the industrial sector at this time. If we take a look at the material sector here, we can see that the material sector, it doesn't have quite the same strength on a seasonal basis as the industrial sector, although they are closely correlated. You can see here that it does slightly outperform the S&P 500 and outperforms the S&P 500 61% of the time. So still a favorable sector, tends to be highly ranked in the month of November. This top panel is the material sector. We did see some consolidation, very similar to the industrial sector, and we have seen some positive performance from there. And we've seen consolidation relative to the S&P 500. It has become oversold, like the industrial sector as well, on a full stochastic oscillator basis. So we could see some strong performance from the sector in the month of November. Here's the metals and mining sector. It actually tends to start performing quite well on November the 19th, so halfway through the month of November. If we take a look here, and this doesn't show because these are full months basically, you can see here that the material sector, metals and mining sector, I should say, on a median basis is actually quite low for the full month of November. So the first half tends to be weak, and the second half tends to be strong, is really what it comes down to. And you can see December tends to be a positive performance for the metals and mining sector. The top panel shows the metals and mining sector on an absolute basis. Here we can see that it really has been fanning out here a little bit with lower lows, which is a little bit concerning. It has underperformed the S&P 500 in the month of, the year of 2024. But we can start to see a pick up here a little bit later in the month, particularly if we start to see some improvement in some of the economic numbers. And the economic numbers have been all over the place. It's very difficult to take the position that we have a particularly strong economy. But it's something to watch out for, how this sector starts to perform later on in November. Flipping the page, we can see that, we come up to a stock here. I mean, I've skipped over a few stocks in here. I've been talking about the sectors of the market. But UPS tends to perform well from October the 10th until December the 8th. It's a classic example of how seasonality works because the busiest time for UPS is actually Christmas. So on a seasonal basis, you tend to want to get into a sector or a stock before everybody gets hyped about the stock or sector. And then when they all get in, you get out. That's really what it comes down to. And this is a good case of that because the UPS tends to actually perform very poorly once in its busiest time period here, starting in mid-December or so. But you can see here that on a full month basis, November tends to be the strongest month of the year for UPS. on a median basis, on an average basis here. And you can see here that it actually outperforms the S&P 500 almost 3/4 of the time. So this is the time if you're looking at UPS, and this is actually just looking down here really quickly. You can see this, the dot here represents the median over the last 5 years from 2018 to 2022. You can see here that the median has been above the S&P 500 as well. So where do we stand right now for the for UPS? Here's UPS on the top panel, and this is UPS relative to the S&P 500. Look at this, a weak performance relative to the S&P 500 for 2023 and 2024 until very recently. And then we've actually seen it performing at market here, which is interesting. And we're starting to see on an absolute basis, we're starting to see a UPS pick up here. On an absolute basis, we haven't seen it have a breakout yet. Now, this actually could be a good setup for UPS, because if we do see that breakout, we could see it actually get some momentum here, and we're starting to see this basing here for UPS as well, which is a positive sign right here. And it looks like we're starting to actually break out relative to the S&P 500 as well. So UPS tends to have a short shelf life, though, on a seasonal basis into early or mid-December. November tends to be one of the strongest months of the year on average over the long term. And then we have December, which tends to also be one of the strongest months of the year for the markets as well. You put the two together, they are the two strongest contiguous months of the year on a seasonal basis. Now, seasonally, we've been a little bit out of whack recently because we saw strong performance in the stock market really from May until, the beginning of November here. Which typically doesn't happen. Yes, you can get spurts and different sectors perform well at different times, but unless we're seeing a really growing economy, you don't tend to get strong performances in that time period. Now, this is being caused by huge amounts of liquidity being dumped into the markets. We've seen governments spending huge amounts of money, running a deficit of 6.5% of GDP in the U.S., just flooding the markets, hiring all sorts of government employees, etc. Now, this is all artificial stimulation. And the effects can still continue on as well, even if it were to slow down here because of a lag taking place. So it's been a little bit, as I said, out of whack, but I still think that we could see the markets actually perform well in November and December with the seasonal trends. Now, talking about the big elephant in the room, the election, without talking politics. This graph shows the fourth-year election seasonal trends from the S&P 500 from 1952 to 2020. You can see here that the market tends to actually head down into late October. And this is typically because investors are concerned with the uncertainty of the election. Investors don't like any uncertainty, and you tend to see that start to get resolved in late October, and then in November, then the election takes place, and the S&P 500 tends to perform well the next 2 months. The 2 months actually tend to be quite strong. That's not what happened this year. We saw the market actually continue to perform well, and as I said earlier, we saw that because largely because of the amount of liquidity being pumped into the markets. The big question is what can happen after the election. If we take a look at the different possibilities coming out of this election, maybe we get a purple state where we got the House controlled by one party and the Senate controlled by another. Maybe that gets looked on favorably because it's gridlock and the government can't do much. The markets like it when the government can't do much. But the thing is Harris and Trump are both proposing to do a lot, which is kind of a weird situation as far as that goes. But I think that if Harris wins, we could see the markets actually do okay, because we'll find the media will rally around a Harris win and support a narrative that could be better for the economy. I think if Trump wins, the markets can also do well, perhaps a little bit better, because his focus really is on cutting taxes, whereas Harris is proposing a number of tax hikes, and that's scaring some investors away. So it's really going to be about the narrative and how it develops after the election takes place. If we see some sort of stalemate where ballots are being recounted and whatnot, that could actually be a little bit concerning for the markets. We could see the markets actually pull back a bit as that takes place, if that does happen. But overall, on a seasonal basis, we do see November and December actually perform well. So far, we've been, as I said, a little bit out of whack, so it could be a little bit different here. But over the 2-month period, we'd probably be expecting because they tend to be so strong on a seasonal basis, to see some positive performance. It's going to be interesting. We'll have to wait and see what happens. Thank you very much for joining me today.